Good morning. So this is one of those mornings where we have 3 stock exchanges together. How common is that? Actually, this is going to be a great conversation, and I want to thank all 3 of you for being here. Again, our topic today is navigating the future of IPOs, and what I'll do is I'll just start all the way on my left side, and if you can, and I'll start with you, Charlie, as the Deputy CEO of the London Stock Exchange. How are we doing? You can talk deal flows. What are the numbers that you're watching in terms of where IPOs are today before we get to the future, right? So what's your snapshot?
Yeah, so I think, so we've seen, everyone always tends to focus on the IPO side as a sort of metric of how healthy are capital markets. We obviously monitor that, but we also look at actually how much capital is raised on the market by companies on the market. Normally, the IPO is the joining point, but they're joining because they want access to capital going forward. So on the follow-on issuance side, as we would call it, that's very healthy. So we've had about $50 billion raised since January last year on the markets, very large transactions, multi-billion dollars, often done overnight or in some cases over an accelerated book build of an hour or two. So the follow-on issuance side has been fine for companies on the markets. I think the IPO markets have been quiet. I think they've been quiet in many markets for the last 18 months or so, and that's a sort of a bunch of factors that everyone here I'm sure is aware of, whether it's geopolitics or the interest rate cycle or wars. Now we're starting to see that unblocking. We've started to see activity resume. We've started to see the pipeline building again for the end of this year and into next year. And we're starting to see a lot more, particularly private equity interest looking to exit. Many of them have been holding on to those assets for quite a long time. So it does feel as though, whilst I'm always nervous around saying the future will be busy, because I'm conscious we've been saying that for a while, it does feel as though it's starting to open up a little bit.
So a below average year was last year, is it what you're saying?
Yes, that's right.
Okay, very good. Bonnie, give us a snapshot from the Hong Kong Stock Exchange. What are some of the numbers that you've been watching in terms of how either this year or last year was, and how it compares on the ARC?
Yeah, actually I think we've been doing quite well. It's been active for us. Just to put you in context, for the first, year to date, since the beginning of the year, we have, between IPOs and follow-on fundraising, raised about $23 billion for our companies. And the pipeline is very strong. We have, since the beginning of the year, also accepted 100 new listing applications. Mostly concentrated actually in the technology sector. And in terms of just IPOs alone, we've completed probably a little more than 20 to date. But what is very exciting, and as we speak, we're in the second day of a very big public offering for a company which is the biggest EV battery maker in the world. And they are set to raise up to more than $5 billion. So we like what we're seeing. And if you ask me what's sort of helping us generate this very healthy pipeline, I would say, and many of you will be aware that since the beginning of the year, there's a lot of talk about the DeepSeek moment. I think that probably allow a lot of investors around the world to, again, look at China assets. And I think once they focused on it, they begin to see very exciting equity stories being available, attractive valuation, and therefore I do feel that this DeepSeek moment, it's a pivot point, and that once again the world is paying attention to this entrepreneurial spirit, which we're seeing in a lot of companies in mainland China.
Mr. Chairman, please do react to what Charlie and Bonnie said in terms of some of the numbers you're watching, the deal flow, number of IPOs, whether last year was above or below, how this year looks, and also reflect on some of the uncertainties when we look at what has been happening in equity markets globally, as was intimated by your colleagues.
Okay, first of all, let me begin by express my appreciation for the Dubai government and concerned institution for such a great conference, and give me some chance to introduce my Korean capital market. And let me say current situation of the global economy. And now, recently IMF, they adjusted their global economic forecasting. For example, the global economic readjusted from 3.3 to 2.8. In United States, they adjusted 2.7 to 1.8. And Korea is not an exception. They forecasted original growth rate 2.0 to 1.0. So at the moment, when it comes to the IPO market in Korea, we have some concerns considering such a global economic situation. But of course, from after 2021, IPO or number of IPO and amount of capital raised from the IPO is a little bit slow down. But at the moment, the Korea government and Korea Exchange make an every effort to sustain the number of IPOs, and maybe either it stay in 70 or 80 companies listed on Korean Exchange, and that is a little bit successful implementation when it comes to the IPO issues. So maybe the Korea government, the effort is focusing on the tech-based venture business for giving a chance to list on Korea Exchange. So even though there might be some headwinds in the global economy and even in macro or economic situation in Korea, we will try and we will do our best to give a chance, more chance for Korean tech-based companies to list on Korea Exchange.
Bonnie, as we do look at those vectors internationally that the chairman was talking about, and both of you and Charlie brought up as well, we can't help but think of the conflict in Europe, the tariff and trade discussions that are happening out of North America. Where are the deals going? You can talk about delistings, you can talk about privatizations. We have had that broad discussion about going east and going west for decades in terms of interest, and it happens generationally, doesn't it? For different socioeconomic issues globally. How are you looking at that? What are you seeing in your exchange? Because with all of this happening, there must be some movement, or maybe there isn't.
Okay, I'll go first. We've seen a lot of things, so let me think about how to best answer your question. So first of all, I mean, and I've been doing IPOs for 3 decades, more than 3 decades. It's my pedigree. I think the world has changed a lot, and what I meant is this. If you wind the clock back 3 decades ago, I think most companies, when they think about fundraising and going public, they look at their home market and they feel, okay, you know, this is the most familiar market. I'll raise capital. The investors know me, know my company. And then I think we went through a very quick phase of globalization where, you know, you want to maximize your distribution. You want to be able to tap investors' pools around the world. And therefore, I think, you know, in the late 90s and, through the 2000s and even the 2010s, we see deals which are done on a global basis. You have multiple tranches and all that. I think all that sort of come to a reversal. I think over the COVID period is when I started seeing, again, a lot of companies, because they need to navigate very delicately within, geopolitical considerations and whatnot. And I think COVID is another added factor which makes just mobility around the world difficult, right? I mean, how do you carry on a roadshow if you can't hop on a plane? And therefore, if I look back to league tables, I would say in 2021 through 23, you again see a lot of companies choosing to go to domestic markets. And whether it is in Europe or in Asia, I see that phenomenon quite clearly. Now, however, I feel that, and with what I'm seeing now, because of the emergence of a lot of these big technology companies, which Chairman Jeong alluded to, they're very capital hungry. I mean, if you need to build big companies which are in artificial intelligence, semiconductor, etc., oftentimes, even if they are able to do their IPO in the domestic market, as they grow, sometimes they outgrow their domestic market, right? And they need billions of dollars to continue their growth journey. And that's when they do need to go and to find a deeper capital pool. Now, of course, as you mentioned, there may be more choices now. You know, private equity, private money is in abundance. However, I'm quite old-fashioned in that regard. I still do believe that, you know, the going public or, you know, IPO is often the most effective way to you know, for private equity to exit, for entrepreneurs to find an equity currency so that they can do mergers and acquisitions, you know, so that they have an additional tool to remunerate their employees and whatnot. So I do hope that it's not going out of fashion. Our probably common challenge is how do we make sure that, you know, we continue to provide a fundraising platform which is, you know, which gives an agnostic solution to entrepreneurs, and they don't need to worry about, you know, the geopolitics and whatnot.
Charlie?
I was going to add, I think that's exactly right. You saw for a period this globalization of capital markets, and in some ways accessing domestic markets or even dual listing sort of fell out of favor for quite a while. And then I think COVID really reignited, and I think the reason it reignited that sort of focus on the importance of domestic capital markets is we started seeing countries seeing domestic capital markets as being part of their economic sovereignty. If they wanted to drive an economic growth agenda, if they didn't have the levers domestically to do that through regulation and through capital markets, that could become difficult. So you started to see countries really prioritizing the growth of their own capital markets, and they could do that through tax incentivization, they could do that through regulation, they could do that through legislation in some instances. But we saw across the world markets and countries seeing domestic capital markets as increasingly being an important lever in driving their own economic growth. So I don't think that's going to change. If anything, we see that sort of continuing, and it does mean that therefore partnership between different countries and different capital markets, I think, is going to be increasingly important. There's always then going to be a sort of another group of companies, as Bonnie mentions, that are sort of homeless is the wrong word, but they've grown so large and they're so international that they can access different markets without necessarily offending anyone because they're so international. And for those companies, that's where, certainly on the UK side, you know, 75% of the FTSE 100's earnings now aren't generated in the UK. 60% of all the stock on the LSE isn't owned by UK fund managers, it's owned by international fund managers. And so I think our focus has been on how do we reform our markets to make sure that for those large global businesses that may be looking overseas, that the UK is an attractive home for them, but also how do we partner with capital markets, noting that that international connectivity is going to become, we think, increasingly important going forward.
Actually, all three of them do get along. As I've seen behind the stage as well in the green room. Mr. Chairman, on that though, do you get along, all of you exchange people? And I'm sorry to say it that way, but it's very colloquial. I mean to say, as we are looking at opportunities to have an IPO, and they, both Bonnie and Charlie were talking about a domestic focus, but there's also the need for capital, right, as was also brought up. Talk about the competitive environment amongst exchanges when we're looking at cross-border IPOs and the challenges that exist based on, we have three opportunities here. If I'm a company, you know, I'll choose either all three or maybe one or two or three. Talk about that.
Okay, in these days, any company try to list their shares on the exchange, then there is no restriction to make choice which exchange more attractive for them. And frankly speaking, the now U.S. market is very strong. Even in Korean big companies, they try to list their shares to the U.S. exchange. And when you compare U.S. exchange and Korea exchange, maybe there is some incentive for a Korean company to choose the U.S. market because abundant liquidity supply to the U.S. market. And in order for them to penetrate the global market through the U.S. market, when in the perspective of the supply chain. So I think many Korean companies doing business worldwide, they have active consideration to list their share to the U.S. market. On the other hand, compared to the U.S. market and Korea market, the U.S. market is very expensive to list up. And the maintenance cost is very expensive than compared to the Korean market. Maybe 1/5 of the listing cost or maintenance cost than when we compare to U.S. and Korean market. So maybe up until now, 24 companies are listed to the U.S. market, but very little companies are successful up until now. So almost all they delisted from the U.S. market, and that they changed to U.S. Korean market. On the other hand, we try to give more incentive regarding the listing on domestic Korean market. Most important thing is we give the extra procedure for technology-based companies. And even though they have still, they don't have the operational profit, but once it evaluated and technologically very advanced, then we give a chance to list on the exchange. So I think there is we are in the middle of the competition between the major exchanges at the moment. So we try to make our exchange attractive. So up until now, I think it is a little bit successfully implemented. So we keep going such an effort.
Mm-hmm. And Charlie, given what the chairman said here, and I know all three of you can feel this, how do you make your exchange more attractive to those entities, those IPOs that you really would like to see listed on your exchange? And part of that question really is, do you see the market right now as riper than ever to attract these IPOs away from the traditional, if you will, spaces, whatever traditional might be? And since I'm from the United States and I go to the NYSE maybe once or twice a year, I'm thinking maybe some of those that are thinking to go to the NYSE or NASDAQ might be looking at the three of you instead. And how do you say, hey, look at LSE instead? What do you do?
So, I mean, to answer your previous question, actually, we do get on, and we do work together. We've got a lot of actually companies that are dual listed. Yeah. So, particularly with Hong Kong, actually, yes. we've got a lot of companies that are dual listed. So, about 20% of all the companies on the LSE are dual listed with another exchange. So, we've got connections with other exchanges because of that dual listing thing. But also, going back to the previous point, that we think partnering with different exchanges is going to be important going forward. I think to your point around differentiating the exchange, when a company, we really believe that in what we call issuer agency, we really believe that the company should be in charge of what they're choosing to do. And so when we're speaking with companies about where to list, there will be some companies, as much as we may not like it, that will do better in other markets. And it is not in our interest or in their interest for those companies to come to London. Every different exchange will have pros and cons to it. There's different regulations, there's different laws, there's different pools of capital, there's different index inclusion, there's a whole different spectrum of things. And so when we're speaking with companies, what we really want to understand is what are the pros and the cons for that specific company across different markets, and make sure that they're making informed decisions, because one of the things that we do tend to find is there is a lot of myths. People talk about higher valuations in the US in particular. They talk about liquidity. There's a lot of myths that actually, when you get down to the data, don't actually bear out. So one of the key things we tend to say to companies is really testing that data. I think then once we've done that, and this is what the UK has certainly been very focused on, is where there are reasons that companies may do better overseas, we want to address those. So the UK's been undergoing the biggest reform agenda of its capital markets in 40 years, since the 1980s. And that is based upon the feedback from companies. So the listing rules have all been rewritten. They came into effect in July, right? So free float requirements down from 25% to 10%, dual class share voting for founders, making it easier for companies to get on the market, making it easier for companies to raise follow-on capital once they're on the market so they can compete with private equity. Changes to research rules to make it easier for companies to get research coverage, changes to corporate governance rules, make them more flexible, changes to index rules. So now the FTSE allows you to be quoted in pounds, dollars, or euros. Company can choose. They can choose to report in multiple currencies. This is all based upon this type of feedback, going through company by company and understanding if they've chosen another market, why have they chosen it, and is there something that the UK could do to change the rules so that next time that won't happen.
What's the question you most often hear from those who are considering LSE versus the Hong Kong Stock Exchange or the Korean Exchange or the NYSE?
So it's a question we get asked quite a lot. In the media in the UK in particular often call up and say, if there was one thing you could change, what would it be?
Yeah.
And the problem historically was it wasn't one thing. Every company would say something different. And that's why the reform process in the UK has had to address everything. It's had to address every bit of the capital market that makes up the capital market. And we've got further to go. We're sort of 3/4 of the way through. We've got a big review at the moment on pensions. Retail inclusion is a big theme in the UK. We want to get more retail investment into the UK. So we're on a journey, but that has been fed from the company side. It's from these types of conversations.
Okay, my turn to do the sales pitch.
I'm ready. I saw Bonnie was like, ready, I'm ready. Okay.
I am ready. I have my boxing gloves on. No. I mean, like Charlie said, we do cooperate between exchanges. We don't fight. And I think both gentlemen talked a lot about the listing requirements, right? Essentially, we need to make sure that our listing framework is fit for purpose, because companies change, their need for capital change, their profile change, and therefore you need to create, conducive listing requirements and frameworks to make sure that you take care of their capital needs. I think both gentlemen address it quite adequately. Now, what I would add to the equation is the demand, okay? Because, at the end of the day, for entrepreneurs who are in the audience, when you're choosing your listing venue, you want whichever market is able to give you the most liquid market and also the most attractive valuation. I think that is a very realistic consideration. So I would say for Hong Kong, we do have a trump card, and that is the fact that we have something called the Connect program. We're the only exchange in the world which can provide the access to tap the very massive capital pool on the mainland Chinese market. And it's something we created back in 2014. Essentially, if a company is listed on the Hong Kong Stock Exchange, regardless of where you're from, where you're incorporated, once you're listed on a primary basis, you will be able to be invested by the very big investor pool in the mainland. And just to give you some data points, our market currently, we have a total of about $5 trillion of market capitalization, amongst all the 2,600 listed companies. Every day, and this is the latest statistics, since the beginning of the year, our average daily trading volume is about $30 billion, of which about 20% can be attributable to what we call southbound funds. So these are mainland Chinese investors using this Connect franchise to invest in stocks which are listed on our exchange. I mean, that's a unique selling point for us, our USP, and it's growing. If I go back 12 months or 18 months, that percentage is probably closer to 15%. But the reason why we're seeing a very steady and healthy increase of southbound trading is because there is a growing middle class population in China. The interest rate environment is such that it's not particularly easy to generate return in mainland China at the moment. So what investors tend to do is they move capital over to Hong Kong, invest in stocks, and there are other things like ETFs and bonds which they can also invest in through the Connect franchise, and that is quite neat. Again, it's sometimes quite difficult to think about that massive population, but at the moment, in terms of registered investors in the mainland, we're talking about a population of about 220 million. That's probably the population of the UK, France, and Germany added together, right? And that's the current state, right? And that number is growing. Now, only a fraction of that is using the Connect franchise to invest in Hong Kong. But I think as the country continue to be wealthier, to accumulate more wealth, we do foresee that number to be growing. So that's my sales pitch.
There you go.
Okay.
All right.
Let me
Well, here we go. All right.
The competition begins.
When it comes to the how to make each exchange more attractive, I think it is totally depends on the demand-based potential. In order for domestic exchange to be boosted, I think the main issue could be IPO. At the same time, how expand the investors to increase. So Korea Exchange is now focusing on the demand base potential. So now we are implementing the corporate value program. That is quite similar with the Japanese case. Maybe Japan started their value programs maybe more than 10 years ago. They're focusing on the investors-friendly environmental change. And so we are now to implement such similar programs. For example, we induced the listed company to give more information to the investors in order for discrepancy of information between investors and management. So investors can easily decide whether or not invest a particular company on the basis of the information fully supplied by the company. And second is, we encourage the listed companies to the return their benefit to the minor shareholders through the cash payment or cash dividend or repurchasement of own stocks. And so we induce such own stock repurchasement. Own stocks need to be cancelled. So those the corporate value programs can be expand the demand potentials for Korean-listed companies' shares. And second is, we're going to expand the opportunity for foreign investors' accessibility to the Korean market. Maybe from last year, we expanded the trading hours in a foreign currency market up until 2 o'clock. And from this year, June, we're going to expand the trading hours of a derivatives market in Korea from 9 hours to 24 hours. So in these days, almost all investment is based on the spot and future arbitrage linkage or hedge linkage. So maybe such an expansion of the trading hours will contribute to expand the foreign investors' demand for Korean stocks. So those are very core initiative at the moment. The Korean exchange to do effort for more successful investment in Korean market.
So you're not going to be sleeping much, is what you're telling me. Mm-hmm. Yeah, that's it. Well, you look good though, so get your sleep in while you can. Yeah. Charlie, talking about sleep or lack thereof, I couldn't help, and I'm going to get very simple for a moment, as we are living through a period of decoupling and recoupling and coupling and understanding where things are at. I could not help but from where you hail from, which was a hard decoupling in a way, and we were trying to understand what the effects are. So by modern standards, the UK is the experienced one when it comes to decoupling. The United States right now, as it looks at tariffs and other moves when it comes to both politics as well as the financial markets. How do you talk about that for those who are curious? When we look at what happened in the UK and we look at what is potentially happening, we're early on in the United States potentially, we're 6 months in as we were saying a moment ago. How do you put that into context to give us some advice, if you will, or some perspective about how to look at this?
Is that a polite way of talking about Brexit, is it? So I think on the Brexit side, when you talk about decoupling, so I think the lesson that we learned, and putting aside whether it was a good thing or a bad thing for a moment,
that's right.
I think we're pragmatists. I think it takes time. You know, it's the financial plumbing ecosystem is amazingly interconnected across geographies, let alone regional hubs like the EU or others. So it takes time to sort of work through that. And then once you've done that, then the question is, okay, well, what's the vision going forward? If you're outside of it, or if you've decoupled, what do you want it to be?
Yes.
I think on the UK side, certainly from the stock exchange and from other parts of the ecosystem, really it did take 2 or 3 years to work through, okay, if we are going to be outside of the EU, what does it mean? What does it mean for the pipes and plumbing? What does it mean for the regulated entities that are trading through the exchange? What does it mean for settlement, clearing, etc.? Now, actually, it was amazingly smooth, but that's because it was an amazing amount of work, and therefore it takes attention away from other things that you'd probably be spending your time on. It's only really been in the last 2 or 3 years now that we've been able to say, okay, you know, it's happened, we're out. What is the vision and the future for the UK capital markets? What role does it want to play in the UK? And that's then what's driven the reform agenda I spoke about before. So I don't know if that's answered the question about the US, but it would. I'd just say these things take a lot of time to sort of work through and play through. And during that time, the challenge is there's a lot of uncertainty. And that's normally the enemy of, particularly on the international side, attracting companies and capital.
How are your listed companies viewing what is happening in the United States? And what are some of the discussion points that your listed companies are having as you as an observer?
So I think it's, if you look at policies around diversity and inclusion or environmental standards, you've now, if you're listed in multiple markets, the US being one of them, or if you're heavily embedded in the US, you're having to understand how do you comply with often differing sets of, and increasingly differing sets of regulation and disclosure requirements. And that's not really something we've had to contend with, certainly not in the last decade or two. And so that's, again, that's a new thing people are going to have to sort of address. And then going forward, if you're talking about companies, and we were talking about international companies, you know, I think companies are increasingly going to be looking at that and saying, well, do I want to be part of that? Is that where I want to take the direction of the company? Or do I want to go a different way? And we're getting an increasing number of companies that are debating that probably would have historically gravitated towards the US and are having a little pause for thought now.
And one of those things, Bonnie, ESG, board composition, what are your listed companies, what are you hearing as you observe their conversations related to what Charlie was saying?
Yeah, so we are a big proponent of ESG and I think especially diversity, I would say. And like Charlie said, at the end of the day, investors, you know, they will have different thoughts and ideas, different mandate, really, and the amount of capital which is set aside for, you know, ESG investing is still abundant, yeah? And therefore, I think, you know, when we think about policy directions, we do take into consideration, you know, the feedback that we receive from different stakeholders, Paul. And I think for our market, and, you know, one thing that, you know, a lot of people might have picked up is the fact that we have been quite bold, I would say, on the diversity front, in the sense that 2 years ago we introduced a new regulation, which is on a mandatory basis. We required all our listed companies to end single gender boards. So that means if you are listed in the Hong Kong, on the Hong Kong Stock Exchange, you must not have a single gender board. We are, I think, one of very few international exchanges, and certainly the first one which have done that. And the reason is, you know, when we started the journey 2 years ago, among our 2,600 companies, we had 800 of them which are single gender. And we didn't like what we saw.
Right.
Our stakeholders come and say, you know, you need to do a little bit more to give them a nudge. And therefore, we introduced the rule. And we gave the companies a transitional period until the end of 2024 to comply. And I'm very happy to report that you basically accomplished what we set out to do. And so, in other words, in the last 2 years, we've added 800 female directorship on our markets, and we're quite proud of that.
Amazing. And how are you measuring the impact of that, Bonnie?
Okay, so it's difficult to answer that question because
I know,
you know,
it
there
is,
are
yeah,
no
it's a tough
control sets of
It's early.
data.
It's also early.
It's early, but I would say at least it is something which has been talked about quite a bit. Thus also bring some attention to the Hong Kong market, which is a good thing. And in the meantime, you know, the fundamentals have improved quite positively. So, you know, our market, I think, compared to 2 years ago, have certainly shown a lot more resilience.
Yeah, impact metrics take many, many years to determine when you are implementing such things. As we close, Mr. Chairman, please reflect on what Charlie and Bonnie said, but also, should I list my company today?
Yes, please.
Yeah. Okay.
Okay, I think in the years to come, I think we are focusing on in twofold. One is, as you already mentioned and discussed, the cooperation between the exchanges. Now, the international economy intervened. And so any companies try to do business, select a business where they feel most attractive. So I think those are the cooperations between the exchanges are more important in the future. And second is maybe there might be some difference between country to country when it comes to the industrial structure. So, for example, in Korea, we need to the industrial paradigms shift from the traditional manufacturing industry to the more information or intelligent-based the industry. So each exchange has to focus on how they will make a policy to accommodate such a structural change they are facing now. So two different sides need to be pursued at the same time.
Thank you.
I suggest you do a triple listing. Korea, the UK, and Hong Kong. You cover all grounds.
I want to hear, so Charlie, on that note, in your closing remarks here, you know, I was listening to Michael Milken, as I was mentioning yesterday, last week, and he had some great conversations with industry titans, and of course he is one too, and many are saying, maybe we wait, maybe we take a breath, right? Again, what would you say to that company as to why they might take a breath or why they may not, or some of the things they should consider in your closing remarks?
I won't comment on a specific company. I think the one thing we tend to observe is that companies wait for the right moment, and then it takes them so long to prepare that they miss the moment. You know, an IPO can take 6 to 12 months to get the company ready, get boards right, get disclosure, et cetera, et cetera. So our general sort of advice is, if you're looking to access the capital markets, whether it's a year away, whether it's 2 years away, get ready, and then your destiny is in your own hands. If the markets are there, if volatility is low, if the valuations is where you want, you can go. But we see a lot of companies sort of doing that, or we'll wait, there's something going on over here, there's something going on over there, and then they start.
It's a different muscle set. You got to get in shape. Be ready for it. Speaking of which, what is that muscle set? What is the muscle that a company today needs to focus on very quickly?
I think there's probably two. One is just the what you'd call the boring sort of actually just getting ready. So that's the accounts, the law, you know, the legal side, disclosure side, and then more broadly, it's the equity story. It's actually your company. You're meeting investors, and they're investing in you for the future prospects of the company. So you want to make sure that equity story is at a point that investors can truly value it and understand it. And there'll be, in any company, there tends to be inflection points. Is it a new product? Is it a new geography? What is it? And trying to time that so that you've got both the equity story that's right at a point that the markets are receptive is pretty critical. And that's why the boring stuff of actually getting ready and the accountants and the disclosure side, you kind of just want that to hand and ready to take off the shelf as and when you need it.
Bonnie, in the narrative or in the brass tacks, what is that muscle that might need to be different now that you would suggest to a company considering going for an IPO in your closing remarks?
Yeah. I totally agree with Charlie. Companies should get ready because, the windows are much tighter than before. Things can happen very quickly, and you don't want to just, take your time, right? Get your prospectus ready, get your team lined up. To the point about equity story, the one thing I'll add is, I think for those of you who are thinking of doing an IPO, when you go and market your equity story, it's not just how you capture the growth. I think investors will increasingly want to understand the resilience of the company, how you have plan B, C, D, and F, because the world is full of challenges. And I think the ability to articulate that very thoughtful strategy and to enhance the resilience of your company will certainly resonate with investors around the world.
The window was what before, and what is it today? Because you said it's smaller. Was it 4 months before, now it's 2 months? 6?
Wow, you're measuring in months.
Yeah.
I mean, we had an IPO, just to give you a sense of how these windows change so frequently. We had a IPO recently where the company were out getting the actual signatures from investors for the IPO on Liberation, so-called Liberation Day. And, that's how quickly things can shift at the moment.
Please thank our panelists today, and thank you all three.
Thank you. Thank you.